This is the Real Estate PowerPlay podcast, getting you the information that you need to be a successful real estate investor. Hosted by Mark Monroe, Ronald Walker, Gabe Rodarte, and me, Marty Grizzanti. Combined, we've done thousands of real estate transactions. So get ready for real stories and true case studies on finding deals, growing portfolios, and making money. Welcome to the show. Yo, welcome back, folks, to the Real Estate Power Play. Super pumped today. Got an absolute juggernaut in the Airbnb business. I am with my co-host, Mark Monroe. And today we have like I said, a very special guest, someone that is crushing it. And I can't wait to dig into it. Airbnb is not something that I do. It is something that is I know it's a game changer for a lot of people, and I know that there's some serious wins that people can take. So anyways, without further ado, George Salas, welcome to the show, brother.
What's up, gentlemen? How you doing today, man? Thanks for having me here.
Great.
Power play, brother. Just glad to be here.
Yeah, great. I appreciate we finally got you on. We've been trying to get you on for probably a good year.
I think so. That's been pretty good. You used to record them live, right, on Tuesdays, and right?
Yeah, we used to do Tuesdays, but now we just record it, and it comes out on every Thursdays on all the podcast networks and on the YouTube channel. So now we just kind of record it, let the editing team, and just kind of take it from there. But did you get out to the family reunion again? I didn't make it this time. I was actually traveling, but I heard they cut it short because of the hurricane.
You know, I was actually at FHL that week at the marketing conference. And on Saturday, I changed my mind from going because of the hurricane, right? So we saw the hurricane was coming, and we were probably not caught any flights back. So I didn't end up going, even though I had the whole week planned to go over there, because it was going to be us being at FHL, Phone Hacking Live, the whole entire week of the 20th of September, and then another week in Tampa, right? So it would have been a little crazy. So we took the whole family out to Tampa. To Orlando.
Nice. Last year was a great convention. I really enjoyed it a lot. I plan on hopefully going next year, so we'll see.
Yeah, too bad. I think they're actually Matt's ending the whole reunion thing just to mastermind. Yeah.
Really interesting.
Yeah. Mm-hmm. No, not sure why, but we're gonna miss it.
Someone should step in and take over.
There you go. I love it.
Well, George, welcome to the show again, and let's just get right into it. So, for those who don't know you and what you do and where you are, could you just give us a little background on you, sir?
Yeah, absolutely. So I'm a short-term rental strategist, and started real estate in 2018. And I started doing fix and flips, wholesale deals, owner finance. And then in the middle of 18, I went into, I figured out what short-term rentals were, right? And I was actually at a venue with some friends, and at the time I was just transitioning into real estate. So just to give you a little bit of context on essentially everything back before then, I was in the hospitality industry, restaurant hospitality for about 9.5 years. So that's what brought me back to really being able to build something of this kind, because I went and I loved the fact that, fix and flips were cool, wholesaling was cool, but I saw something bigger, right? And something that would brings a little bit of a different strategy for us, which was more of like the consistency of starting a business from zero, right? Which was cash flow, right? Consistency, predictability, and that's what short-term rentals brought us. So middle of 18, I was able to really find out what short-term rentals were, and by the end of that year, we had 20 SDRs, all rental arbitrage though. We didn't transition into buying yet, as we are now, but that's how the whole thing got started, brother. So it's been a great journey so far.
That's crazy that you haven't been doing this very long, but just what you've been able to accomplish in such a short period of time is very inspiring. So I guess share what you're doing now. So what does it look like? Are you, like you said, are you still doing the arbitrage model? That there seems to be some really good stuff with that. No clue how it all works. I don't even know how you approach that type of thing with an arbitrage type model where you don't actually own it, but you're like the manager. And at the same time, so you can answer that, but at the same time, what are you doing now? What are you focusing on? And how's that looking for 2022 and beyond?
Yeah, absolutely. So over the last, since COVID hit, right, right at COVID, we had about 40 units, right? And this is between, 30 plus rental arbitrage deals and just a handful of houses that we were turning from our flips, right? So when COVID hit, everything, slowed down. So like most of our portfolio back then was in the 2 mile radius of downtown. Okay, so we had mostly apartment units, some condos. We were doing full on arbitrage, right? But when that happened, so we found ourselves in a small, kind of a small problem, right? And that was the income stopped coming, right? So we had all these leases to pay. So one of my big mistakes was essentially being able to not create enough income, because these units were only bringing 1.5x to 2x, right? The rent. So now before COVID, they were bringing about 2.5x. They really weren't really power STRs, right? STRs is short-term rentals in short, right? So during COVID is when I realized that what we needed to do is create something a little more, something that would bring a little more profits and something would bring a little more cash flow. So what we focus on right now is that 3 to 5x, right? So we go for houses. We focus on the single family residential space right now, and it's mostly houses that bring 3 to 5x. So how we categorize and how we screen our properties, right? We've got a reverse engineered process, right? So, and then if I may, I'll break that down for you guys.
Yeah, go into it. Hell yeah.
Awesome. I know we went into it really, really quickly, but so essentially what we do is now, right, compared to before I used to just go grab the properties and I thought the location was everything. So today we first focus on the market, right? So we go to any market, right? We look up some of the tools that we use, right? And we identify the most profitable markets that bring the best gross rent multipliers. That's the first metric. So a gross rent multiplier is kind of like saying, hey, a percentage of my purchase price in gross rent. So for example, if we're going to purchase a $500,000 house, our screening method is, hey, we got to make sure that we get 20% gross rent multiplier of that, right? Which is $100,000 in revenue. How we do this, we go to the market, we identify it, and then we reverse engineer the actual strategy, right? We go market, sub-market, and then we identify the pocket, which I call a micro market, right? Which could be a pocket, could be maybe a district or a zip code or an area where the revenue and the actual real estate prices are giving us that 20% gross rent multiplier, right? And also that we're able to acquire these properties at a pretty good, I would say, like if you do your gross rents and you're buying a $500,000 property, right? So what's going to happen is you're going to be anywhere between, if you're at 20%, you're going to be anywhere between 3 to 5x your mortgage, right? So even with your mortgages being so high and interest rates being a little bit higher, our goal is to get 3 to 5x, right? So now we've been able to achieve 5 and 6 in a few properties. Now that we've got a really well-defined process on reverse engineering, right? The actual markets, now we identify properties that are 4x and above, right? So 4x. So we do the calculation, we throw it into our calculator, and if the deal works, there's two things, right? One is it going to make 20% of our per acquisition price, right? And then once we go a little bit into depth in the actual analysis, then we figure out if the property is going to bring me 4x and above of my mortgage. That is going to give me pretty much a guaranteed 50%, maybe 40% actual profit margins out of my revenue. So if I make, my property's bringing 120, right? I'm paying $30,000 in mortgages, then my expenses are going to be anywhere between 25 to 30%, right? So that's a high level screening method. Obviously, there's a lot more details into it where you plug everything into a spreadsheet, right? So once we figured that out, Mark and Marty, right, we figured out that it wasn't about the property, it wasn't about just the location, and it was literally the market. The market dictates what happens to the long-term strategy of your SDR. So we look back at 4 years worth of data, and we reverse engineer that process, and then we do the rest, okay? And then the rest, if I may, I'll break down a 5-step thing, whenever you guys are ready, but it's,
Yeah.
we can
I
break it
have
down
one
for you.
question before you go into that. Back to
Crushing
your
it,
other,
George.
like when you're talking about, micro, into an area, really narrowing down, looking for a piece of property,
Mhm.
on that, how do you find those properties? You work with realtors, you work with other investors, like how do you kind of tone into those? I'm just curious.
Absolutely. Great question, Mark. So number one is we see if the numbers are going to make sense to buy retail, but obviously as investors, we want to have a little bit of cushion there, right? So we don't buy at 70% on the dollar, right? Because those are, number one, those are harder to find, right? And then number two is what I look at is this. If I try to go buy a 70 or 80% property, then I'm going to go buy it on hard money, right? And then I'm going to fix it up, and I'm going to pay closing costs. I'm going to pay holding costs. I'm going to pay money costs. Then I'm going to pay refinance costs. By that time, that's an additional 10 to 12%, right? So if I buy something at 80 cents on the dollar, then I'm at 92. If I buy something at 70, then I'm at 82. So to me, I can make that gap, that difference, in the first 3 to 6 months. Because if I find a property that nets me $3,000 to $5,000, you do the math. 6 months times 5,000, that's 30 grand, right? So 6 months times 3,000, that's 15 grand. So I rather make up the net and go cash flow immediately rather than wait a while, right? Now, when we launch this, we're actually working on a fund. I think I mentioned that to you, Mark, right? When we launch the fund, we're going to do 85 cents on the dollar max, because we do want to leverage and make sure that our investors are, have some cushion and some protection there.
Got it. Okay.
So,
You can go on to the next part of your, before I cut you off. I apologize. Thanks. I appreciate that.
absolutely. No, and then we don't find them through realtors unless we use that strategy. But yes, to answer your question, I completely kind of spaced out a little bit there, right? To answer your question, if we were going to buy something a little bit below retail, obviously we try to get it as low as we can, and we would find it on the MLS because it's ready to go and it's ready to launch, right? So we can cash flow between 30 to 60 days from closing, right? So actually, we can cash flow within 30 days from closing, right? We start cash flowing within 30 days, and then for the most part, I've seen some of our projects be profitable within 30 days. But if you're ramping up and then you're launching in the middle of the month, sometimes it takes a little bit to ramp up to figure out like what's that sweet spot pricing, right? So you've got to tweak. Plus, in the short-term rental industry, there are seasons, right? You've got low, mid, and high season, and then you got those kind of trickles in between, right? So it goes up and down. Sometimes you'll have a bit of a difference. So to answer your question, we do straight get them from the MLS, and we do get some from wholesalers at 85% on the dollar.
Mm-hmm. Well, you have it all dialed in, right? So it's like it's super scientific at this point. I gotta ask you. I mean, so with over 100 of these that you're running at any given time, I mean, what does that look like on a day-to-day basis? I mean, probably very helpful that you had that background in the hospitality, and that's because I think that's so key because there's so many other things, right? And I know I'm just going to spitball here, but there's like, you guys get reviewed, and then like there's a super host, and like there's so much, there's so many things that are like you can't necessarily control when people write a review, I guess. But before you answer that question, like, how do you manage that and like the expectations of some people that come into your Airbnbs? What does it look like? What does your team look like? I mean, how do you respond to all these like, hey, how do I get insides?
I love it. I love it. Great question, brother. So when it comes to the operations, it is very, very heavy. Okay. So we've scaled down from 100. We don't have 100 anymore, but between ourselves and our students, we're helping actually support right at 100, right? So we had the max at one point that we were managing, right? It was 55 of them, okay? So, and that was a little bit of a nightmare, right? Not gonna lie, but here is the point. If you're managing or operating 55 properties that bring $23,000. Okay, that's 150. We averaged right at about 100 to 130 last year, right? And in the last 12 months. Now, if you're managing those types of properties, right, then okay, that's fine. You're running a business, you're making some profits, cool, and it's a lot of work. But imagine if we switch that and we took those, let's just say 55 to 25 homes that bring you $8,000 each. Okay. Now, what we're creating there is a bigger gap, right? So that's what we did when it came to changing our entire model, right? We had a bunch. Now we've scaled down to less, more profitable listings. We've upgraded how we actually stage and how we design our properties so they're revenuing even higher. We found out where the better markets are. We've picked better properties. So now operating is a lot smoother because number one is if we're creating a product that everybody wants, that everybody loves, that everyone's going to give us a better review versus creating a low level, right? When I started in 2018, it was a low level apartment deal. And even the homes that we launched were basic homes because that's what we knew what to do, right? We just went in and really just tried one thing after the other, one thing after the other, one thing after the other. And then we realized that the real money is in the experience and the experiential property, right? So we focus on experiential properties, whether it's a 2-bedroom, 3-bedroom, 4-bedroom, whatever it is, right? We put an experience inside. So it could be a theme. We just launched a farmhouse theme property, right? We've got some luxury properties with
Very
pools
cool.
and cabanas, and we've got some properties on the lake, on the water. And then a lot of our portfolio is still, like, I would say there's 3 levels of properties, Mark and Marty, okay? There's your basic homes, there's your nice AK model homes, and then there are your high-end or experiential or design, right? Everything we do is on that top design experiential. Why? Because simply once you put that on the market, right, you are by default, you've created a top 10% product. So what we want to do is we want to create an irresistible product, right? Rather than launching a basic home, because there are lots of basic homes out there in the market, right? Houston is super saturated. Texas is saturated, right? The increase in supply just in the last year alone, gentlemen, it's been between 40 to 60% in supply, and the demand has only increased between 20 to 25 in all major cities in Texas.
Wow. And that's one of the reasons what's pushing the market up so much, because of the shortage of housing. Because I see some states are actually trying, like Ohio. Isn't Ohio trying to stop something with, I don't know if it's going through, but I saw something that they're trying to make it where if you're an LLC, you couldn't own a home or something like that in Ohio because of the whole, the Airbnb models coming in. And plus you have these hedge funds buying as well.
Right. So Ohio, I'm not so sure, but I know Atlanta has been, Chicago. There are a lot of major cities. So that's a big risk of investing in a major city, right? Hedge funds are going into these major cities. So supply is growing. As long as the investor knows about it, like it's not over, but you've really got to step up your game, right? So now your prices are gonna be jacked up. And then what happens is your occupancy goes down, right? Because there's more supply and people have more choices. They're booking other properties. So you've got to really step up your game there, or you've got to step up your game with the current properties, or you got to create a better product from the get-go, which is nicer, higher end, or designer themed, special, unique, experiential, right? So here's the tweak, and this is for everybody on the audience. Secondary markets is where it's at, right? Smaller cities, smaller outside cities outside your metropolitan cities, you've got a lot better chance of making it because the investor hasn't gone there. People are now in a trend. It's a trend for people to just go away, right? Once people found out during COVID that they can work from an Airbnb, right? It pushed up, like people's minds. So by 2026, experts are saying that 80% of all vacation rental bookings are going to be done online, right? So all of them, right? So right now, obviously, I'm not sure what the percentage below that, but you're having a transition and a growth in this industry that's just insane right now.
I think the arbitrage model is like such a great thing for people to, if they don't have the I guess the experience with buying a property, but there's so many properties that are just like sitting there, right? That could really win with somebody that would would operate these in an effective way. Like you think about all these like second homes that people have that they barely go to on the lake or by the beach, Like, what a great model. Well, why don't people just stick with that? Like, why even buy these properties? Like, there seems to be a lot of risk with that because, again, I might challenge you here and say, what happens when there's another downturn and you can't afford these mortgages when you're buying at 90 cents on the dollar, 85 cents on the dollar, when it's like, geez, you don't have like an exit strategy of putting in a long-term renter in there. I mean, what happens there, George?
Well, as a I'll say as a experienced vacation rental operator, I've done like probably about 60, 70 arbitrages, right? And I've helped my clients do the arbitrage deals, and we've purchased quite a few as well, right? So, and you know what? An honest answer to that is, I think that if you're getting started and you want to cash flow, right, then cash flow quickly and bring a better cash on cash return quickly. If you can spend $40,000 in an arbitrage home and make $70,000 net that year. This is from experience. I spent 35 in one, make 88 in the same year, right? You can't, it will work. Now, the problem with arbitrage is right now, in my opinion, is rents are a lot higher. So if you don't go and net pick, right, and then you select the right property, right, then you're going to be in a world of regular basic homes and really nice model homes. And that's okay. You can still make some money, but in our case, for us, right, I wouldn't if you're getting started, maybe it's not the way to go for this higher end. To me, it makes more sense to cash flow $3,000 to $5,000 per home per month instead of cash flowing $1,000, right? That's my whole thought process, right? And the reason for that is because the operating costs are pretty high, right? You're going to pay your rent, and then you're paying cleaning fees, you're paying that. So alone, you're talking about 25 to 30% on operating costs minimum, right? So if you hire a management company, it's another 15 to 20%. So operating these things can get a little heavy. So if you create the bigger margins, let's just say if you build a property or create an actual STR that brings you 50% margins, and you launch and you manage it yourself, once you've really established it, you can turn it to a management company, pay 20%, and you still make 30% net profits on your total. And then your cash on cash return is still really good. Your ROI is going to be good. So it just depends on your goals, right? It depends on your goals. If you've got a little bit of cash, arbitrage is the way to go. We know arbitrage is the back of our hand. If you have additional and you're thinking long term, I want to build wealth, I want to build lifestyle, right? And I want to be able to visit my properties in different cities while they still perform, right? While they'll still make me money. I want to take, maybe if I have 10 of them, right? And I want to take 10 vacations a year. I don't have to spend in hotels. I could just go and block my property for a full weekend or a week in advance and really enjoy that. So to me, it's depending on your goal, depending on what you really want to do at the end of the day, right? That's my whole model there, So yeah, brother.
Love it. I love it. Great stuff. I like it. I do the same thing. I do arbitrage. I buy a lot on seller financing, and I turn around and sell it like in a lease option to create that monthly arbitrage type of thing. So, and I had somebody, one of my JV partners, he really wanted to get into the Airbnb model. And we had a property that we were looking at doing an Airbnb, but the upfront cost of really setting it up and then furnishing it and doing all that, it kind of deterred me to kind of stay away from it. Is there ways to kind of keep that cost down? Like, how do you kind of work through that? Because that's one of the biggest things that I looked at when I was looking at doing my first Airbnb.
I love it. Great question, Mark. So yes, there is. So if you pick a property that's already built in and ready to go, and you do that by reverse engineer your market research. So let me give you an example here. Okay. So we went and one of our first luxury properties was, and I'm gonna give you two examples. One where we spent a lot of money, and where we owned the property. One where we spent the same amount of money and we leased the property. Okay, so let's talk the lease first. We leased this property for $3,500. It was the best SDR in the middle of the city, right? It had a really cool pool, a hot tub, like a built-in addition to the house that goes around. Right, and then the addition had full 8-foot windows where people, where you could come out of the bedroom in the morning and really look at the pool, look at the nature. It was really built in for that. So we went, I figured this out. I offered an additional $500 in rent for a 3-year lease, right?
Love
so
it.
instead of paying $3,000, I paid $3,500. I did a 3-year lease and an option to buy it. Okay, I'm in 2 year and 7 months right now, almost 2 years, right?
Nice.
So
I love it.
the first year, that strategy, I actually put in about $3,500, $35,000, and to stage it was 25, 26. We built 2 cabanas out there, and our revenue went the first summer bringing in 15,000 to 18,000 on average, to the second summer bringing in about 22,000 on average. One month would be like April was 19,780 or something, right? And then May was above 20, June was above 20, July was above 20, August I think was a little bit below 20. So you have 5 months of making additional money. So in the first 12 months of doing an arbitrage deal, because we picked the property right, which goes back to, hey, how do I really spend less? We picked the property right. We knew it worked. My goal was to make a 3x multiplier, right? Which is 3x my rent, which is 10,500. But we ended up averaging 15,000. Okay. Now that's a winner. So once I figured that one out, that was like a year, a little bit above a year and a half ago, right? So I figured that out, and I'm like, okay, well, why am I doing these apartments in these houses that make $3,000-$4,000 and I'm barely netting $1,000, right? I'm going to switch to that. So our goal has been switching all that so we can get to 100 properties, that are 6-figure properties for us. Now, let me give you the example of the purchase. I purchased this house, right? And it was a subject to. Okay, my down payment was $10,900, $10,000 for the owner, $900 for the actual closing costs, right? And then turn around, the house was a 2019 build, right? And as a 2019 build, it's really nice. It's a condo type of property. If I would have just put furniture in there, then I would have made, maybe $3,000 a month. But what we did is we turned around and did an actual farmhouse theme. Right, so we designed the entire thing. We added trim. We painted the cabinets. We painted every single room as a design. Right, so thinking outside the box, creating a client avatar who we're going to cater to. Right, so and then being able to deliver a unique experience. That was our point. We spent $40,000 doing that project, and we just launched it. So it's brought in so far about 4,000, for this month, which is pretty cool, right? I think we're going to average in anywhere between 80 and 100. So I spent $40K to average 80 to 100. My mortgage in that thing is $1,350. Okay, compared to my $3,500 rent, I'm still getting a 4 or 5x multiplier of my mortgage, right? But what I'm doing is I'm taking a regular house, condo style 2-story, and turning it into, but I have to spend more money, turning it into a designer property. So in that case, I own the property, so I wanted to spend more money and I wanted to put it in. If you're doing arbitrage, you gotta pick something that has already been built out perfect for that market. 2 different types of properties, 2 different avatars, 2 different clienteles, same amount of money spent, different strategy on the get-go, right? So we spent almost the same amount. One brought $88,000 in net for the first year, which that cash on cash was 270% because we spent like 30 something, right? So pretty damn good. The other one, we only spent $10K and then we put an additional $40K. So we spent $50K. We're not seeing a cash on cash yet because we just launched it, but just 2 different styles. You got to pick a property that's ready to go, right? If you're going to do arbitrage, or if you just don't want to spend so much, right? So this could have a really cool pool. It could have a lake view, and it could have the amenities that the market tells you that it needs. If the market says, well, Mr. George, you've got to pick properties that have X, Y, Z, then we go and model that. We find a sweet spot in the market, and then we find the most profitable properties, and then we model.
I love it. I love your enthusiasm. I mean, I'm sold. You're obviously very passionate about this, and so those folks who are passionate, and you also have like a very much a sense of urgency. If you've only been doing this since 2018, to do the right thing and get the job done. And I know that you're off camera. We were talking about going to masterminds and just constantly trying to get better at it. I think you're going to dominate in anything that you do. So I'm just glad to have you on the show. But I really agree with you. I think the next thing, again, in my small opinion of Airbnb, just because we stay at them all the time, we love it, big fan, is creating that experience, right? I think that if you're able to go to that next level, right, and this is where you have to become, like you said, thinking outside the box. This is where you actually have to put in the work, is to create that experience. Anybody can just kind of go to the Homes Plus or the home decor place and kind of just put in some like crappy furniture. But when you're taking that next step up to do that, I think the experience thing is a huge deal. So what can people do to like create an experience with maybe they got 1 or 2 Airbnbs and they're doing pretty well, but how can they maybe like up it a bit and increase maybe their income on those Airbnbs that they already have?
I love it. Great question, brother. So if I was somebody with just 1 or 2, right, I would focus on finding my ideal guest. Okay. Once you find your ideal guest, you could have 1 or 2 avatars, right? I call that the avatar. There's a 3-step in there. You essentially figure out what your current Airbnb's reviews are telling you, right? And then you're going to build out essentially the marketing, your title, the pictures, and what you portray, right? And then also on your website, you're going to cater to that person. So once you finding out your ideal guest will actually help you increase your prices. Why? Because instead of catering to everybody, now you're catering to the family friendly, right? To the workers at home, and those people that know that, hey, I need XYZ, like I need fast Wi-Fi, I need a place to rest, I need like a fully loaded kitchen because I'm going to book long-term stays because I come in for work for about 2-3 weeks. If you're talking to somebody straight, and then you're getting in their brain, right? This is sales 101. You've got to emotionally hit that one, and you've got to identify who you're talking to, who your customer is. So the same thing as when we create, products, services, when we sell anything, any business we start, we've got to identify who is our niche, because obviously the riches are in the niches, right? We identify that, then you cater to that guest, and you give them what they want, right? So, and when you give them what they want, then they'll pay you more. That's one way. The second way is really upping your game when it comes to pricing strategy, right? Charging more during the holidays, adding, for example, like we have 9 ways to generate revenue within our company. Each listing, each property has 9 ways. There is additional charges, there is guest services, there's early and late check-ins. There's 9 ways. I can go on, right? So you could drop a little things here and there. And let me just give you an example, right? Let's just say you're charging $300 a night, okay, for your Airbnb. And a group comes, and the way we do our settings is we do anybody after the half of the number of that property that the property sleeps. So if it's a 12-person property, at 6, we charge an additional $25 per guest, right? And especially during the high season. So a guest comes in, a group comes in, and they have 10 guests, okay? So they're going to look at the listing. If somebody puts 6, they're going to get a better price. If somebody puts 10, they're going to get a little bit higher. So if they book for 4 nights, you have additional 4 guests, and it's additional $25 per night. So that's 25, 50, 75, 100. That's $100 additional per night. You got 4 nights, that's an additional
Awesome.
$400, 400. But you do that 3 times in your month, that's an additional $1,200. And you multiply 12 by 12, that's $14,400, right? So you 3 times out of 6 reservations, that's only 50%, or 2 times. But there's little ways to increase your revenue. But you've got to be strategic. You got to do it when the time is right. You can't do it sometimes during low season. You want to do that because you want to have these bigger groups. And if you do, it still works, but it is maximizing during that high season. That's just one of the 9 examples. Right?
That's excellent. Super good.
I love it. Thank you. I hope that was valuable.
No, it's great. So we always ask our guests this one question, and I think I know what it is because you kind of said it earlier, but we call it, what was the biggest power play move that changed your business, that you feel that you kind of like you were going along and you just did that one power play move and it just changed everything? What do you think that was?
I love it. Okay. Can I tell like a 2-minute story about it? Do you mind? Okay.
Absolutely.
So it's COVID time, right? I'm sitting in my office and I'm like, how do I figure out this whole thing? I've got 35 rents and like these 3 properties, right? I'm reading this book, right? And the book's name is by Mike McAllowich, fix this next. I'm trying to fix my business during COVID. Like, who didn't want to fix their business during COVID, right? We all did. So I realized that my model was only a 2x model. So my PowerPlay was changing it from a 2x to a 5x model. Okay. I realized that my sales weren't enough and that I wasn't making the multiplier that I needed, right? When you're doing 2x, right, you're really not going to be profitable. That was the power play I made. But for me to be able to find that power play, I invested and worked on myself. I read so many books. I was literally working 18 hours a day, Mark and Marty, 18 hours a day during COVID. And the reason for that, actually, my health went a little bit down because I was trying to figure out, how do I fix my business? Okay. And I found it. It was all because I watched courses. I was really testing and tweaking what worked, and I was watching videos, watching my peers, because I was very new at the time in the business. So I really didn't know how to pivot. So I tried everything. But if it wasn't for buying these courses, watching, learning, investing in myself, I wouldn't have found that book. Okay, that book gave me the actual turn and the breakthrough to be able to turn everything around. And then boom, 2021, we did 1.2 mil, in revenue, which we went up.
Awesome.
Right now, like, we're just going for that niche, right? We're creating these niche little properties, and it's not just going to be Houston anymore, right? So I hope that was
great. That's great. And it's so funny you say that, because it is very true. It's like, it's not that first thing, or it's not like that what I'm getting is, it's like, it's always like, because I did this, and then because I did that, and because I read that book, and because I joined that group, and because I met that person in that group, that person had me meet their buddy who was doing this, and because of that, I am now this person. So it's never like one thing. It's always just like, it builds up the more that we're willing to put ourselves out there. I'm willing to put myself out there to, even mention to people that I'm in this business, and then because I mentioned that and it's uncomfortable for me, they told me about this person who's been doing it for a long time, and that person told me about reading this book. So it's all of it, right? It's like constantly making sure that we put ourselves out there and be uncomfortable, because all those things that you were just saying were uncomfortable because it's the first time you've ever did it.
100%. So before I got into this business, gentlemen, like, I didn't share this, but I invested into this nightclub, right? And this venue, I wanted to be an owner, and this is 2014, and I was in the hospitality for 10 years, but this was year 7, right? So I put all my eggs in one basket. Didn't know very much about how to really operate or run a business, how to do self-marketing, right? I invested into someone else's as an LP. Didn't do enough due diligence. $410,000, right? Young, I was 27 years old at the time, right? And when we started doing this thing, right? Maybe I was a little older than that, right? Maybe like 30, right? Still, right? So lost everything. I have no idea what to do. I am broke. I am literally down, and I've just lost. I said, it's not going to happen to me. I'm not going to stay where I'm at. We're going to pick this up. I'm going to come back stronger. So started doing what we all do as entrepreneurs, right? We went to learn. We really put ourselves out there. I went to courses. I went to network. I went to seminars. I bought books, submerged myself into learning real estate. And then the opportunities started coming, right? Then opportunity here, opportunity there, partnership, JV, flip, then SDRs, right? So it's always a period of growth. It's always a period of growth. That's been like my number one thing that I could say. Like, if you stop growing and learning, then you're dying.
Yes.
It's either or, right?
Yes.
So
what are your thoughts on, thank you for mentioning that, because not everybody is, I think the majority of us don't just come from, making it, right? There's got to be a reason. There's usually like you don't want to say that it's like you hit rock bottom, but you usually have to hit something in order to bounce back up, right? And we all go through those different periods. So thank you for being honest and open about that. What are your thoughts on this? I was curious. You see a lot of this stuff with like Ryan Pineda's got this NFT with the Tykes thing, where it's like you get a piece of ownership in an Airbnb. Where do you see crypto and blockchain and Airbnb and NFT? Have you gone down that rabbit hole at all?
I did. I watched Ryan Pineda Fun Lunch live do his presentation on it, and I looked a little bit into it. I'm not really into crypto world anymore, right? I got hacked quite a few years ago. Somebody took a bunch of money out of my Coinbase accounts, and then it's been
Oh
kind of,
no.
yeah. So that was like 2017. So but I think that it's an evolution, right? So new, and but it's not the real thing to me, right?
Yeah.
It's not the real thing. So I'm like, I want a piece of real estate that I can
Yeah.
touch, and I can go and like spend the weekend with my family, and then just watch the water or something. So I don't know. It's not like my biggest thing, but what about you guys?
No, I was just curious your point. I think there's something there. I don't know if this right now is like the MySpace version where it's like it's not quite fully cooked yet. But I mean, there's definitely a ton of interest, and a lot smarter people than me are in this, and they're moving into that. I'm interested more of like how to, with syndications, the part where people can essentially
Mm,
you can sell your share. Like there's no like the liquidity of after buying something with like a syndication. Like if I'm an LP on something, I can't. It's very tough for me to go and sell that on the secondary market. There is no such thing, and unless I'm trying to sell it back to the GP or people within my group. So I think
mhm.
there's something there with like tokenizing real estate, where then
Yeah.
you can sell that on a second share, or say, hey, it's because it's going up in value, and now we're making so much money in cash flow because the operator is following their business plan. Like now it's become more valuable, my share. So is there a way I can get capital from that and extract capital from that as well as keeping some ownership? I don't know. There's a million things going on with it, but I wanted your opinion because I know you're in the industry, but
I love
no,
it.
that's good stuff. Thanks for being honest.
Absolutely, man.
No,
So
hey, George, I just want to go back a second about, in that story you just mentioned about your club. I mean, that's mind blowing. And but listeners, if you're listening to this, you have to look at failure as a learning experience. That's all you have to look at it. Most entrepreneurs actually go through this. I actually kind of have a similar story to what you did around your same age. I had a mortgage company, 107 loan officers back up in Washington, D.C. area.
wow.
Same thing, came down to Florida, started on another business, hired 6 employees, and all my money that I made from that company, poured it all in and pretty much lost about 85-90% of it. So you get burnt out, but just think of, these stories from other people. Everybody goes through this. So if you're in that moment of right now and you're trying to, you've been doing wholesaling and the market's shifting and you're having a hard time, just start, take a few minutes, start learning more, and start reinventing yourself. You learn one strategy and one thing about this business, just take that and go into another area within the business. But that story was just amazing.
I love it. You got to apply, right? What you learn in wholesaling or fix and flipping, I'm applying today. I'm applying today. You're applying today. All the knowledge just kind of grows on you. And now you've got all these skills. And all of a sudden, you realize that you can build something much bigger because you've got skills in all these areas, right? So
Now you mentioned something about students. Tell me a little bit about that. You have like some type of education or training. Like, what do you do?
absolutely. So we've got two level coaching programs, right? We've been doing this for about a year and a half. We've got about 55 students that have gone through the program, right? So one is a 120-day accelerator where we pretty much come in and work with the client and help them launch their first SDR. But we focus on the same strategy I mentioned earlier, right? Where we find them a profitable property that's going to make 100K or more based on factual data, right? And then the second one is more of a 1 year higher end mastermind type of deal, right? And within there, we've got lots of clients, and we've got a couple of products and services where we're helping our clients as well, in addition to that within our community. So, but we've got a pretty strong community, and this model is so unique. We do short-term rentals different, and I feel that I have the need. It's a must for me to be able to spread my message and put out, what most people don't know, because I've gone through all of it. I've started with these little SDRs, and I've made money, and then all of a sudden COVID happened. I stopped making money, and then we went to homes, and they were basic and some nice homes, right? And then that started shifting. Now we're going all high. I mean, everything changes, especially in a growing industry, right? So we've been taking our journey ourselves and just helping our clients pivot, right? Pivot. So if they don't have an SDR, they have a long-term rentals, right? It's not just about turning that long-term rental into an STR, right? Because if you don't either put a bunch of money into it, right, make it really nice and unique, or you don't have the right amenities, it might not be the good fit, right? Now, are you going to be happy making, $1,200 a month instead of $500 that you're making on your long-term rental? Maybe, maybe not. But then it's required to spend an additional, $3,000 to $5,000 per room in your home in order to make that $1,200. So you've got to kind of figure out like the cash on cash if it makes sense or not, right? So it's been a great journey so far.
How would people find you? Just go ahead and put your information for the listeners.
Let's do it. Yeah, I've got a couple really cool. I've got a Facebook group, right? So and that's the domain is thenewrealestateinvestor.com. Okay, so that's our Facebook group. I know you have a pretty awesome Facebook group. So and then it's called a six-figure short-term rentals for real estate investors. That's a Facebook group. And then my personal website is George Salas 360, right? The number's 360.com, and that's where I just connect with everybody, and then I've got my info, my socials in there, and stuff like that. And then we've got a training for everybody that's free, basically, right? So that talks about our model. So I'll be happy to send it to you guys if you want to check it out. But I break down my entire model, right? And then that's basically a 5-step thing. And then the domain for that sixfigurestr.com.
I love it, buddy. That's awesome. So before we wrap up, my final question for you is, two things. My final two questions. What is a KPI? What is a KPI that you look at that's probably the most important KPI to your business? Something maybe it's daily, weekly, monthly, whatever, yearly that you look at. And then
what's the other one?
Start with that one first.
Okay, absolutely. So I mean, there's a couple. The most important to me is going to be your average daily rate, right? So you got to see if it's going up or down, because that's how your entire business model. And I'll say, right next to that one is going to be your occupancy rate, right? Which is very, very easy. And then, I mean, if you're looking at your actual reservation payout per reservation, that tells me big things, right? So, and then that's, if you're able, like our goal is to actually pay off our mortgage with the first payment, the first payout that we receive, right? So we're targeting properties. I'm like, okay, how much can I get payout per weekend here? So if a week, my mortgage is $2,000, can I get $2,000 with that first weekend book, right? I'm looking at those things, when I'm looking at areas, because I'm going into and I'm analyzing like these two properties. So like I would say 3 KPIs are super important, so I mean, you asked me for one, but I wanted to give.
No, that was super good. Super good. And then my last question is, if you did, and hopefully this never happens again, if you lost it all again, what would you do?
If I lost it all again, what would I do? That is, no one has asked me that question recently. But if I lost it all again, I would take all the knowledge that I have gotten and I would figure out, like, let's just say, if I was like Grant Cardone and going into a place like that, if I wanted to build $1 million business, he did it in 6 months or something, or 3 months, I'm not sure, right? And if I wanted to rebuild a business to $1 million again, I would reapply the strategies that I learned, but with this, I would apply more the sales and marketing side, because when I started, I knew all the real estate. I knew, right? I was learning real estate. I was learning how to do this. I was learning how to do that. And I was just dig deep, but I never realized that if you learn the beginning point of sales and marketing as a business owner, then I would have learned how to market my business better, right? And how to sell my business better.
I love it. George, thank you so much for coming on. We really appreciate it, man. This was full of, again, I have very little experience and knowledge of STR and Airbnb. So it was amazing, brother. I appreciate you.
Yeah,
amen.
Appreciate it.
Thanks for chatting with me, gentlemen. Appreciate it.
And that's it, guys. That is the Real Estate Power Play. Again, every Tuesday we go and it's not live, but you can get them on YouTube. And, don't even think about don't even worry about Stitcher or the Google one. Just go right to Apple. That's the only place people you can listen to podcasts these days. So anyways, like us, subscribe us, share us, tell your friends, tell your mom. Come on, write us a comment, for crying out loud. Anyways, that's it. That's the show. Peace.
This has been another episode of Real Estate Power Play. guiding real estate entrepreneurs to a brighter future. If you liked what you heard, consider subscribing wherever you listen to your podcast or follow us on YouTube at Real Estate PowerPlay.